welcome back to the Capital Mindset Show. We're here for the part 2 of the portfolio review requests, and this one's going to be on the popular investor, Robert Reynolds. Okay, so we're going to discuss a little bit in greater detail than we did with Ray Dalio's, because again, let's face it, Ray Dalio's portfolio is very large. So I kind of just gave you guys a bird's eye view and a quick opinion on Ray Dalio's portfolio. It seems to be overly diversified in my case, or my opinion, and very interestingly, heavily invested in index funds to some degree, which you know, again, says to me, why not do it myself? Well, Robert Reynolds is a different style of investor. I would consider him he's a YouTube creator, so let's say retail investor, but I don't know, he might have some professional background. I have no idea, literally zero clue. You guys can be the answer to that down below. So I know just as much as, I guess, you know, someone who just came across him, I guess. That's how much I know about him. So, all right. Seems like a nice individual, but we're going to be going over his portfolio. I want to go over some caveats here because I understand the mechanism for how eToro kind of works is that as new money comes in, you have to kind of re-update the portfolio. So some of these P&L statements or P&L positions, right, might not be as accurate, but we're just going to go off of what eToro states. And eToro does have it publicly listed as far as what this person's portfolio is. So we're just going to go again off of that. And I'm going to be making some commentary. I will be avoiding commenting on every single stock because some stocks I've already made videos on, and you guys can find those on the Capital Mindset shows, okay, or Capital Mindset YouTube channel. So taking a look at what is the portfolio, we shall go over here to, you know, his portfolio here on eToro. All right, so right off the bat, I see that there's two positions that are two largest positions that are actually in my portfolio, but on the speculative side of the portfolio. And we do see the P&L statement says it's down about 36.86% on Overstock and 40% down on Zillow. So quick commentary on both of those. They're in my portfolio because I think, one, the allocation I have is, in my opinion, for myself, responsible. Two, I do think they have a lot of potential, and that's the key word, potential. They haven't executed on that. Overstock, for me, I can see why someone would make it a core holding because, let's face it, I was very honest and upfront about that position. I'm not invested in it for its core business. I'm invested in it for its subsidiary, so to speak, and therefore, I cannot, in good conscience, make it a large position in my portfolio. I have to be honest with myself. I have to practice what I preach. And I think being honest with oneself is extraordinarily important. So taking a look at Zillow, very similar thing. For Zillow, I think Zillow is an extraordinary ball of potential. And, you know, I think it can do well, but it has to kind of prove itself. I have a vision that if management keeps proceeding by that vision, I will gain and gain and gain in confidence in, and it can actually leave the speculative side if I start to see execution. But until then, it is speculative to me. Doesn't mean it has to be to everyone. Okay, so, and I want to be very clear. When I say it's a speculative, it doesn't mean it's a trash stock. Obviously, if I have it in the portfolio, I personally believe that it can do well. Okay, so Zillow being down 40% and 36%, I understand that this person has an elevated allocation to these two positions, something that I wouldn't necessarily do, but doesn't mean I'm right or wrong. Okay, what it does mean is that if I am correct in that it will perform well, Robert Reynolds will have a better, will benefit more than will I, right? I will benefit less from that allocation that I currently have. But I feel like I am comfortable with that allocation and that performance that I might expect. But if it goes down, let's say to zero, let's say they both fail, I also won't feel it or cry about it at the end of the day. So that's what we call about responsible allocation strategy, right? And that depends on the individual and a variety of factors. Now, taking a look at Crocs. Crocs is a company I have made videos on. I personally don't like that investment too much. It is more of a value play. We will be plugging that one into the model. So don't worry, stick to the end or later parts of the video where we start to plug in some of these into the model. This is just kind of me going over it and giving my initial thoughts. I like Dropbox and Amazon. Those are both positions within the portfolio. I think he has greater exposure to Dropbox than I do. In doing research for this video, I did watch some of his videos regarding these positions. Dropbox, he did apparently state that he was selling at the time, and it was higher, by the way, and then he bought back when it was lower, so good execution trade on that. I tend to not do that kind of stuff. I tend to just kind of let things sit, and I'm pretty lazy with it, all right? Let's be honest, the most I'll ever do is probably sell some call options, or maybe if I hold a position. Otherwise, I'm going to be just selling it. Amazon is another interesting position, so down about 12.24%. And by the way, again, just remember that caveat I said at the beginning about eToro. So just remember that. So I know that some of you might say, well, it's not entirely accurate because they have to reshuffle or something. I'm just going off of what eToro says, or it might be that eToro is accurate. I'm just going to go off of what eToro says. I gave you the caveat warning, okay, at the beginning. So my hands are clean there. All right. Anyways, Amazon is down about 12.24% in the holding period, by the way. So I agree with ownership in Amazon. I own Amazon. Amazon's about 2% of the portfolio. It used to be more. But I trimmed it down, at some point like last year. I trimmed it down in 2021. And so it is sitting still at 2%. So that's the remainder position. And I like to do that a lot of times when I want to maintain very long-term relationships with a company. So you might notice that about me. I don't really talk specifically about that. But when I love a company a lot, even if I sell some, I don't sell at all. And Meta's another company that I do agree with. Oh, and I kind of skipped over Dropbox, but yeah, I do like Dropbox. And we'll get to Meta and Dropbox together. But Meta and Dropbox as a duality, you kind of get to understand, and maybe this person understands that duality, that the metaverse is going to be a lot of B2B opportunities, not just the B2C. B2C is kind of like the meme tier of the metaverse, because people think Ready Player One and all that. But people need to understand the metaverse in terms of the scope, in terms of what it's actually going for, is a lot of B2B that has a lot of potential, a lot of implications in terms of data, analytics, and the like. All right. So I'd be more concerned for something like Salesforce, right? But not saying that Salesforce is going to lose out on anything, but I'd be more on the concern side. I'd be watching that space. Looking at Warner Brothers Discovery, I do also like that company. I have a small allocation. I have an allocation of about 2% to that and around 3% to Netflix. Everyone can by the way, if you guys were wondering, my portfolio is public, free for everyone to see. And I got to commend Robert. It's also free for everyone to see his here. So commend someone when they should be, right? Or compliment someone when the compliments are due. I'm forgetting and butchering that statement. But back to this, Bitcoin exposure about 5.42%, down about 14.97%. I don't have any crypto exposure personally. I do cheer on for Bitcoin. I call myself a sideline cheerleader for crypto or for specific cryptocurrencies. I just don't know which one will win out in the end, if one will win out. But I'm willing to sit by and just watch, and I'll just accumulate assets, and I'll be fine. I'll be fine. Trust me. Don't cry about me in crypto. I will be fine. Okay. But exposure to crypto, he has, I guess you could call that a responsible allocation of crypto. So a totality of 5.42%. Some might argue that's responsible. All right, looking at BioNTech, I don't really know much about that. I can't really comment on it. That seems, when I just did a preliminary look at it, it appears as though they do testing for COVID-19. That was like a big thing for BioNTech. So down about 28.04%. GoPro is one I have done a video on. So with GoPro, I did kind of had some concerns. He's down about 9.98% here today, or as of now. And GoPro, my concerns were, well, I understand the thesis. They have the software, the editing software. Very interesting in that aspect. It appears to be cheap. We might plug that one into the model too, but I've already made a video on it. You know what? For some of these, I'm not going to plug into the model, even though I might say that, but it's because they deserve their own video. So like Warner Bros. Discovery is going to get its own video, so I'm not really plugging that into the model. Crocs will be plugging into the model. Overstock and Zillow will not be plugging in. Amazon will not. Warner Bros. Discovery will not. Again, like I said, GoPro, we might. Apps, Digital Turbine, APPS, he's down about 20.74% there. That one, I'm concerned about that position. I have looked at that company because I basically look at companies all day, every day. But APPS, my main concern, obviously, is going from Alphabet, right? Alphabet has a lot of power in their business. So when you're in a business relationship, I like to be in the companies that have the power. Okay, and APPS just doesn't have that power in the relationship. Royal Mail, interesting thesis on that one. That was like a value play that he bought. So he's up about 4.1%. I'm thinking that one's more of a shuffle that caused, maybe some performance retracement. But let me see this. So we have Royal Mail stock, and we can kind of get a good glimpse of it, what's happened. Okay, so there was a retracement here. So he actually might have removed some of his gains. Which would be unfortunate if that actually is the case. But Regardless, looking down here, we have Corsair. Corsair needs no introduction. It is at $15.99. This is a very interesting company that it is actually approaching the not price targets, but targets prices where I said it was interesting, which is in the low teens. There's a bunch of videos on the Capital Mindset channel about Corsair going back last year. And Corsair, when it was closer to the 30s, we said, it probably, I wouldn't be surprised if it got to the low 20s. People were like, no, it's not going to get to the low 20s. It got to the low 20s, and we did an update video on Corsair, and it's like, oh, it probably will actually go to the low teens. We backed it up by analysis. We backed it up with analysis, and I think now, again, this one, he might have actually been pulled into the whole YouTube FOMO regarding some investments. So I am a little bit kind of, why do you have that one in your portfolio to that size, 3.7%? So right now he's down about 30% on Corsair Gaming. If he has conviction, of course, now is probably a better time to definitely be buying something like Corsair Gaming, because it's not an absolute dog crap of a business. It's just not a fantastic business. That's a lot of the language I've been using with Corsair. It's not a fantastic business. It's a good business. It's like, it's okay. It's okay to good. It's in between there. Now, taking a look at Micron. Micron's a company that I have talked about in the past. Micron's been pulling back with the rest of the chip makers, and there was a time when I talked about Micron saying, well, it's not really at the right price, and then just boom, skyrocketed, similar to AMD. And now all the chip stocks are kind of coming down to earth here. So Micron Technologies, I'd be actually interested to take another look at it. So I'm going to actually make another video revisiting Micron and revisiting the things I stated. And always, like I do, is when I do an update video, I always show you guys what I stated before. And then I try to say, okay, has anything changed? What has changed if the fundamentals have changed? Of course, eventually I won't be able to do that for every video because I'm only just one person. So I can't update every single stock in the market, but I'll do my best. PayPal Holdings, this is another stock that I've talked about here and there. There's at least 2 videos on the channel about PayPal, maybe even 3 videos. I think the third video might be a comparative video. But PayPal's one that, again, everyone's been buying PayPal. People love PayPal. Like investors love PayPal. And I say retail investors typically because I see a lot of YouTubers talk about PayPal, etc. I think the valuation was very rich. And I think even at $100 was rich. At least that's what I stated in the videos. You guys can go watch those videos if you so choose, or just take my word for it that I stated that in those videos. And so right now here, PayPal does deserve an update, so I'm not going to be putting that into the model, just so everyone understands that. Nokia down here, Nokia is an interesting play. This is one that I've stated before in the live streams and even on Strongman's live stream. My brother's actually had he's played Nokia actually, and he did it through call option. It was very good, and he did it in November of 2020 before the whole meme craze. He didn't even expect that. That was a beautiful blessing that just propelled his position, to the stratosphere. But he's out of Nokia. He's not a Nokia. But I understand the thesis Nokia, decent play in terms of 5G infrastructure, et cetera. Regeneron is another one that he probably wishes he put more into Regeneron, because Regeneron was a very interesting pharmaceutical play. It was very depressed. I did see when he bought it. He bought it when, basically it was thrown to the side. I would be concerned about Regeneron. We're going to plug in Regeneron into the model. But Regeneron is a company that, be careful with patent cliffs. I point you guys to something like Biogen. These smaller biotech companies, when I say smaller, I know it's a big company, but smaller is in the tens of billions, less than 100 billion. These smaller companies, be cautious on them, okay? Oftentimes, if people need and absolutely require exposure to the pharmaceutical space, I like to say, if we're close friends, I'd say, well, maybe look at something like the bigger players, or maybe think about an index fund in that field if you just need exposure, or better yet, when you buy the index funds, you get that exposure already, and you don't really have to think about it too much. And that's if you must have exposure to something like that. Again, if you want exposure in isolation, I would stick to the bigger players, unless you are very well versed in pharmacology. And in that case, you can probably experiment, or not experiment, you would have viable knowledge as to what treatments work, what treatments don't work. I would say this, where I currently work, because it's no longer a position, so I can state it. The Biogen was a position, and we bought it prior to the approval of, I can never pronounce it, but the Alzheimer's drug. And there was a lot of information even then, way back then, that the drug just didn't really work, right? But there was a hunch, we had a very strong hunch that there was a lot of political pressure to accept the drug. And they ended up accepting the drug, to the frustration of many, even though there was not a council, but a panel of experts prior that actually said that they believed the drug should be rejected. And even then, we still believed that that would occur. And it was a very good trade, so to speak. But it was over 1 year. So it was very profitable, that one. But anyways, that's not here or there. Biogen's a case study as to be careful for the downside risk after that. All right. So patent cliffs, et cetera. So I apologize for just smacking you guys there with the mic. Next is rig Transocean. I understand the thesis there. A lot of, difficulty to produce in domestic, but I've been stating this in all the oil videos. Be very careful. That thesis can change on a dime. Be very careful, very careful. But, exposure is light, so if it goes to zero, he probably won't feel that. Nano dimensions. So here's where there's a lot of exposure to my overall comment. I'll get to that at the end. But nano dimensions, okay, that's like a small exposure. That's fine. Clean spark, small exposure. That's fine. Tupperware, questionable. That one's up decently, 26%, but that's kind of like a multi-level marketing company. Not really my cup of tea. Looks very cheap, but yes. So overall in all, I do think that there's a lot of exposure to what I would consider speculative assets for me, but not for him. So the performance, I can't really tell what the performance really has been. Just in this bird's eye view, it appears to be very poor performance. But again, with eToro, it makes it very difficult to really keep track of things because you have to not rebalance, but you have to do something when new capital comes in order to get them involved. And so taking a look at the feed, this individual, is commenting a little bit, about selling some things, buying some things. What is this about? Okay, so very, very, I guess, transparent research here. So this person does have 2 million followers. Okay, that's different. So 3,300 copiers. I was like, whoa, my gosh, the AUM there is probably insane. So yeah, and then some. I think there was some comments about selling some stuff, but a little bit more of a buy and seller. They readjust the portfolio here and there. An exposure so they rebalance quite often, and that's not really my cup of tea, but whatever. All right, so we're going to go over into the model, and so I remind myself which ones I'm going to go over. So first is Crocs. So let's go Crocs and let the model kind of breathe and say, okay, wake up, model. Okay, so here we have a Crocs price target of $99.92, applying 43.98% upside. Sentiment, we're going to look at that, it's too small of a company. So let's actually see what we can do here. Average growth. So it is expected to decline in growth. Cash flows are expected to increase. It is cannibalizing its shares. A little bit of a concern here is that I think that the average growth buyback we can probably say is let's say it's just 2%. So 2% there. Growth rates, that's going off of cash flows, but I'd say that growth, be careful that it actually ends up being more of a decline than anything, and something like that I'd probably actually demand for a greater margin of safety. So those are the prices that I'd be really interested in buying it if I was interested in it. But it looks decently priced. I'm not going to say it doesn't look like a terrible. It does not look expensive. I'll say that. That's as far as I'll go. So on to the next position we're going to actually plug in. Let's pick. Which one did I say? Not Micron, because that's going to get a video. PayPal's going to get a video. GoPro, GPRO. Let's go. So GPRO. Let's see what comes up. All right, so another one that looks, well, wait for the numbers to come in. Looks fairly cheap. Looks like it doesn't need much actually to get going. This dilution rate, I do expect continual dilution from this company for the time being. A lot of stock-based compensation. Free cash flow looks pretty good. PE looks pretty good. Altman Z-score, okay, good capitalization on the balance sheet. Estimates are actually for a decline, so I would expect that decent decline there. I would put that in the scenario. Okay, so then I'd actually lower these estimates to about 8%, 5%, 3%, 1%, et cetera. And then based off of these assumptions, we do see that the allocation of the portfolio just says, don't add it. That's what the portfolio says, or not the portfolio, sorry, the model says. The model is telling me, don't even bother with this one. But I can see the thesis. It can play out, and probably the market is probably not expecting that. We are sitting at about $8.92. Might revisit this at one point and kind of go over some of my older thoughts on GoPro, see if they've really changed. But this is just a quick preliminary thought, so keep that in mind. And then Corsair, I'm not going to go over Corsair, not going to go over Nano Dimensions, not going to go over that. Regeneron, REGN, I'll plug in REGN, and then I'll give, again, my final closing thoughts on this portfolio, what I think about it. Do I think it might outperform or underperform the market over longer periods of time? Okay, so taking a look at this company, we have reached, from what I see, some overvaluation. If we look at the estimates are expected to come down. That has to do with because Regeneron does a lot of treatments for COVID-19. So as the pandemic kind of gets past us, we do expect that growth to actually slow down or decline a little bit, kind of come back to normal. So be careful with that over the next 10 years, what that would translate to. I am diluting it by about 1%, so I actually want to change that, let's say, to about 0.14%. There you go. So we're kind of in line with the average. Maybe they do more, but let's say they do 1%, right? They start returning more capital to shareholders. We did see something like that with Biogen. Biogen did start, just buying back and eating up shares. If you take a look at, other creators that talked really well about Biogen, they did not. And that's why I'm very careful about talking about those kinds of companies. They did not address the risks. You probably know which creators I'm talking about. They actually talked about Biogen quite a bit, and I think some of their family members are in pharmaceuticals. I don't know if they made any commentary on that, if their family members are doctors, but I would say that it was there was a lot of research to show that the drug was just not effective, and you have to be very careful with that. On sentiment grounds, it was a decent investment for a short period of time. Now it's a different story. So now maybe looking at Biogen, they have a good portfolio going forward. And I'm talking about a company that's not even in front of us right now, but just it's a case study for being careful with these kinds of companies. Look at Gilead as well. Gilead, it been dead money for a long time. Doesn't mean it won't be dead money in the future or will be dead money in the future. It actually can recover from here, but Regeneron, be careful with that. All right. And I think that kind of covers the last bit of this person's portfolio that I will really get into. Okay, so I will finish off with some closing thoughts. So Robert Reynolds' portfolio is, I think, maybe on the more aggressive side in terms of speculation and I consider it speculation, but let's remove that word from the equation. It's more aggressive in some instances than for me or for what I would like. There's some missing great businesses that I think are on here. I don't agree with the allocation to Meta. I think Meta should probably have a greater target allocation, and that's the key word, target allocation. I imagine that you have a good target allocation for Meta, so I won't actually make a judgment on the target allocation strategy. But going through the list, it's still. I don't know why Nano Dimensions really on here at that size. I would say the size should have been less. And, in hindsight, it definitely should have. Nano Dimensions, I think that one was falling into a little bit of the FOMO. There was a lot of movement in Nano Dimensions or a lot of movement in all the 3D printing stocks. So this is a lesson to everyone, just be careful with that. Make judgments based off of the asset and your projections. Don't worry about what the market's doing at any given point in time. It's very difficult to do. Very difficult. Easier said than done. But try to do it. Try to just be objective at every given point in time. Taking a look at Zillow and Overstock, these are positions that I think were a little bit excess exposure to. And, good on you because maybe you have the psychology to kind of weather through this, but a lot of people just don't have the psychology to weather through something like that. But again, I don't think they're going to fail, but I also understand, for myself that I must have a prudent allocation. But again, if they do end up doing well, this portfolio is going to do fantastic. But that's the if. The if scenario is if something like that were to occur. I think, in my opinion, I would allocate even more to Meta in this instance. I would not have some of these positions whatsoever. But that's what makes a market of different opinions, different allocation strategies, etc. And it's great. All right. So on that note, guys, thank you guys so much for watching. I enjoyed actually looking at this person's videos and figuring out some of their thoughts on some of these positions. And, to find out that there were a decent amount of, not a decent amount, but, a couple of positions that we actually do share in common. And you can see how vastly different portfolios can look like because allocation can be different, right? Not just positions. There were a lot of different positions that I don't hold, but allocation could be vastly different, and that actually changes the overall performance of portfolios. All right. On that note, guys, thank you guys so much for watching. I'll see you guys in the next one. Bye. Oh, actually, I almost said bye. One more comment. There was one more comment, everyone. So for those of you who did not click off, because I just said bye to you, there's one more comment that I actually want to make, because I did find this in the research, and some of you will be like, you did not mention this. I apologize. I will mention it now. This individual investor was actually invested, and this kind of coincides with that theme that I was saying, that perhaps there were some stocks this person invested in because of the whole YouTube craze. Perhaps, I have no idea. But they were invested in vegan food companies such as Tattooed Chef, such as what was it? Beyond Meat. So this person, though, to their credit, found actually very concerning stuff about Tattooed Chef and exited in a good time. So credit where credit is due. That's the phrase. Credit where credit is due. And congratulations on that, Robert. As well as Beyond Meat, exiting Beyond Meat. So realizing one's mistakes, credit where credit is due. I also agree with this person on the fact that those companies are very questionable, to say the least, in terms of their performance and future prospects. There was a lot of bullishness behind it, and I think the initial reason, we can talk about why that was, but give someone credit when they make a correction and say, okay, I was wrong, and I'm changing, right? But just to mention that, because some of you would be like, you didn't mention his whole vegan thing. And I also want to mention there was some speak about having, I think, I don't remember exactly what it was, but something about digital tokens and percentage interest, whatever that this creator was talking about. Just want to state about that. I don't condone any of that. And actually, there will be a video series coming out about that, about the extraordinary risk that is implied in those things that people are not paying attention to. That will come. I will get to that at some point. But that is a very important video that needs to come out on a Capital Mindset. Capital Mindset needs to make a stance on that, and actually try to provide as much free information as to how these entities do provide those interest rates. But on that note, guys, now for real, thank you guys so much for watching. Hope you guys have a great one.